We have done Barrick Gold in the past. Paul, we just did a video. Did it come out about? No, it did not. We just did a video, Paul, about inflation versus gold versus silver versus Bitcoins. It's all kind of confusing to a normal guy like myself. Can you give us your new stance on gold and what you're investing in your portfolio, which is given to the patrons? It has some gold in it, and maybe tell us
It
why.
has gold miners in
Yes,
there.
of course.
I own GDX and GDXJ. They are two ETFs, one of which buys smaller miners and one of which buys bigger miners. And I'm sure Barrick is in the bigger one. So I don't understand commodities very well. I don't understand gold and silver because it doesn't give me a stream of cash flow. I very much understand streams of cash flow, balance sheets, earnings, things like that I understand very well. A fixed asset that has a value as all intents and purposes, a perception, it's harder for me to understand that. Now, I don't want to get into the whole philosophical, but all money has a perception. Okay, I got it. But I like a steady stream of cash. So when I'm making a bet on gold, I want to make a bet on the miners because I don't know which miner will do the best. But I look at the entire industry and the sector and say, okay, everybody here is selling really cheap because the sector was really beaten down for a long time. Instead of making one or two individual bets, let me buy the entire sector. I'll probably make less money, but I'll also make less mistakes. And I'm okay with that. All right?
Mm-hmm.
Great. So Barrick, should we go into it?
Yeah, let me give a little once over. Barrick Gold is a gold corporation mining company that produces gold, copper, 16 operating sites in 13 countries. It's headquartered in Toronto, Canada. Beautiful city, Paul.
In 2020, the firm produced nearly 4.8 million attributable ounces of gold and nearly 460 million pounds of copper. Wow.
Gold is rad, you know. It comes out from the middle of the earth, you know. That's how.
And gold's back, baby.
Gold is back.
I never thought I'd ever have anything gold. Now I have a couple gold watches. I love it. I actually want to get the Scott Disick.
Your gold teeth.
Gold teeth?
Yeah, bicuspid.
It's actually, I don't have my wisdom teeth removed. I actually got them capped in gold.
Yeah. So anyway, you want to go with Barrick Gold? Let's get
I actually don't have my wisdom teeth removed, by the way.
Oh, okay. Keep going. Okay, great. Keep going.
Okay, $38 billion company, 15.3 PE, and a 19% profit margin. So far, I like what I see. They have a dividend yield of 1.56%, which pays about $600 million a year. I'm just going to skip to the top here. Last year's free cash flow was $3.7 billion. The last 5 years, 1.5. So their dividends are easily covered.
I love having a PE less than 20. This is rare nowadays. And that profit margin, I mean, I don't know what gold miners are, but it's just nice to see a nice 20% profit margin.
And we'll see from looking at other years whether that was a consistent profit margin or a 1 year profit margin or whatever it is. You know what I mean?
1.5 dividends, not too shabby, Paul.
No, it's not. But the great news is they easily have the cash flow to cover their dividend. So I'm not worried about this dividend being taken away. Low return on assets, low return on invested capital, that's fine.
All right, how about pillar number 3 is revenue growth over the past 5 years, my friend?
Now, the revenue on this company is going to go where gold goes, the price of gold. When gold prices are up, revenue is going to be up. When gold prices are down, revenue is going to be down. So, in the last 5 years, where's gold prices gone? Up.
Oh, look at that. Look at that.
8.6 to 12.8. Let's look at gold prices. EIG. Okay, so we go to gold prices. We go 5 years. Let's go all. What's 5 years? 16. Look at gold prices. $1,000 to $1,800. Does that make sense now?
Mm-hmm.
There you go. So that's where I look at it going, okay, I can make money here. Now, net income growth. 1.42 billion to 2.46. Check mark there. Now look at this, Uncle Seth. These are the concerns I have. 1.59 billion right here. Other income and expenses up top, they had a write-off of 1.1 billion. Look in previous years. Write-off. Look at those four big write-offs right there. This is a total of $28 billion in write-offs over a 4-year period.
What are they doing?
My guess is that they had some mines that they had in their assets as a certain price, and they ended up being like, oops, gold is down a lot, so we got to write these things down.
Mm-hmm.
So that's my guess. Again, this is part of the shallowness of the 8 pillars. This just tells you a story. Go find out the answers and go find out the rest of the story here. Because I don't like these big losses here that are attributable to write-offs. You know what I mean?
Kyle says when we get to the shares outstanding, it'll be eye-opening as well. But let's get to shares outstanding then. Pillar number 5.
Oof. 1.17 to 1.78. But in fairness, I will say this. There was a big jump here. Did they make an acquisition?
Yeah, that's what he was saying. 2019, tons of shares.
Yeah, but what happened?
Anybody know out there? Let us know.
Let's ask what happened here because it looks like it was probably an acquisition along the way because they had pretty consistent shares outstanding for the previous 4 or 5 years.
Jonathan saying Barrick is amazing, great capital, disciplined. And a lot of people are bringing up, obviously, the idea of gold's price and where that's going to go. Do you want to look at current assets over current liabilities, pillar number 6?
8.8 billion versus 2.33. So they have plenty of cash on hand. Plenty of cash on hand.
Free cash flow?
1.5 to 3.69. That's a check with an average of 1.5. 1.5 times 20 is 30 billion. What's the market cap?
37?
Is it? So it's an X, but it's not far off the 20 number. Now, look at previous year's free cash flow. Boy, they had 5 years in a row of negative free cash flow.
So years ago, Paul, from 2010 through 2011, 12, and this was a $50 stock, upwards of, $50 stock. It's at 21 today.
So isn't it interesting? Look at this. 2012 to 15, it was losing money hand over fist. And it was $50 stock. Now it's making more money, and it's a $20 stock. Do you see how...
No, I'm sorry. It went from a drastic decline, Paul. My apologies. By 2000, it was $50 in 2011. By 2015, $6.
Oh, makes sense because look what happened. 2015 was their big write-off year stopped. The free cash flow losses stopped. Boom. And now what's it at?
$21.
So it's tripled since then because they've gotten secure on their... Because remember, guys, back... how long ago did we have the big run-up for gold prices, right? So look, gold prices skyrocketed. Gold prices skyrocketed in 2012. Went to 1,800. The perception was gold's going to the moon. You can't miss out. Everybody loved Barrick. Go buy Barrick. All of a sudden, gold prices collapse. What happens to the stock? It collapsed. So if you believe in gold prices and you want to believe in a company, buy these companies. If you want to just buy gold, buy gold. It doesn't matter to me. I just prefer understanding free cash flow. And I had to do more research on each individual companies, see what their actual mining costs are. But if you believe in gold in the future, which I do, I buy the miners.
Trader Mo is here. He's patiently waiting over there, flexing his biceps and chesticles. And he's here to tell us about Barrick Gold. Are they trading it?
Okay, before I go, gold is very difficult to trade because of what a perfect example is what happened last week. It goes up, it jumps down, it gaps all over the place. So this gold, GOLD, it doesn't move, it doesn't do that very much. But when you get into like GDX and AU and all these different things, they gap quite often. So if you're trading gold, just be very careful. Make sure you have stops in place. I mean, here's a good example. It dropped down just last week when the Fed said whatever the hell they said. Anyways, downtrend right now, of course, and this thing can just keep falling on you. I think all of this is going to come down with gold and trading it to whatever they do with inflation and interest rates and this and that. And gold, as we all know, I mean, it's very driven by markets and market environments. So right now, gold is in the news. So gold's going to be swinging around a lot. So if you are trading this, just please use stops. That's all I ask of you.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.